Well. How the tables have turned. Fundrise haters and naysayers are nowhere to be seen or heard from. Now that Fundrise has posted positive second quarter results, while the stock market is down 20% and crypto market is burning in flames. Let's take a look at both of my Fundrise portfolios and go over these magnificent results. And I don't want to say it, but I told you so. Coming up. If you're new to the channel, my name is Trey and I have over $545,000 invested in stocks, crypto, and real estate. If you enjoyed this video, make sure you check out my entire Fundrise playlist linked in the description below. It has over 40 videos on everything and anything you need to know before, during, and after investing with Fundrise. Also, if you're new to Fundrise and you would like to open an account, make sure to use my referral link in the description below. For a limited time only, Fundrise is giving a bonus of $50 to anyone who opens a new account and deposits just $10. Now, let's get started. Now, in the beginning of 2022, I have made a bold prediction that Fundrise will start to cool off after a blazing hot 2021. 2021 has seen magnificent returns of over 29%, so obviously, it is very hard to match that. I anticipated between a 4 and 8% return in 2022, and we are right on track for that. I also anticipated that returns in the second, third, and fourth quarters will progressively become smaller and smaller, and that we may even see a negative return in one of the quarters. And it looks like these predictions are coming true. Now, I do have to admit that after a 29% return in 2021, seeing the returns that we're seeing this year are a bit underwhelming to say the least, but we have to stay positive as investors. Fundrise is still outperforming the stock market and the crypto market. We are still making profit while many others are in the red. And plus, we're enjoying the stress and volatility-free way of investing. As many of you know, I have two Fundrise portfolios, the total value of which is almost $123,000. Both portfolios are long-term growth plus portfolios, yet they yield different returns on my investments. Let's find out why and take a look at the second quarter returns of each of these portfolios. First, let's go over my eReit and eFund heavy portfolio, whose total value is around $72,000, and that is what you're seeing in front of you right now. And here we see that our second quarter return was 2.3% right over here, and our total return in 2022 so far is 5.9%, as you could see over there. Now, not too bad considering the economic environment that we're in right now. So if we open this reporting nav tab, just like so, we can see that the best performing eReit in the second quarter was the East Coast eReit. As you can see, East Coast eReit in the second quarter delivered astonishing 8.2% return. Now, this return of the East Coast eReit is by far higher than any returns from any other eFunds and eReits here. And I do believe that. Why? Well, because I live on the East Coast, and let me tell you, the houses here are still selling in less than a month after being put on sale and for prices much higher of the asking value. So another thing that we notice here is that most, but of course not all other eReits and eFunds are actually generating less returns than they did in the first quarter of 2022. And that is likely because markets in the Midwest and the Sun Belt regions that Fundrise is so heavily invested in are starting to cool off due to obviously rising mortgage interest rates and everyone's favorite, inflation. Rising interest rates tend to reduce demand for houses since people don't want to pay mortgages with high interest rates. I mean, who does? And when the demand goes down, the prices go down as well. And so that is why we see this decrease in returns from many other eREITs and eFunds, but it seems that the East Coast eREIT is keeping us afloat and getting them positive returns in the second quarter. Thank you, East Coast. It is probably even safe to say that without the East Coast eREIT in my portfolio, my returns would possibly be close to zero or maybe even negative in the second quarter. So what we're going to do now is we're going to switch from this percentage tab to the dollar tab, and we're going to minimize here. So what this shows is that my total return in the second quarter of 2022 is $1,566, which is about $800 less than in the first quarter, as you could see here. Sucks! But all things considered, I'm still very happy with this return on my $70,000 portfolio. Also know that for the first time ever, I'm seeing a negative return in this high risk development fund. So if we open this up, we go to the development eREIT, minus $65. Never seen this before in 2 years. That just speaks for the economic conditions that we're in right now, where the high risk investments are underperforming. Now, let's see where these returns actually come from by scrolling down a bit where it says net return. So we're going to open this tab, and then we could see that this breaks down our returns in terms of dividends and appreciation. And just as expected, because I'm in a long-term growth investment plan, more than 80% of my returns come from appreciation. So as you can see here, for the 2022 year to date, around $3,300 are from appreciation, and only about $475 are from dividends. Next, let's take a look at my Fundrise IPO heavy portfolio, whose total value is $50,753. As we could see, the return in the second quarter is 2.2%, very similar to my previous portfolio. And when we open this tab, we see that again, the best performing eREIT is the East Coast eREIT, and the worst performing is the development eREIT, which is down around 7.3% in the second quarter. So as you can see, the East Coast eREIT here has the best return of 8.1%. Again, thank you so much. But the development eREIT is minus 7.3% in this portfolio. Very disappointing. And again, it just speaks for the environment that we're in right now. And the total return so far in 2022 is around 6.8%. Now, you may be wondering why my first portfolio returned 5.9% while the second one returned 6.8%. Well, the answer is very simple. These portfolios were opened at different times. The first one, the one with $70,000 in it, was opened in January of 2020, pre-pandemic, while the $50,000 portfolio was opened in January of 2021, about a year later. Therefore, the proportions of my money allocated to different eFunds and eREITs is different between these two portfolios, and it just turned out to be that investments in Fundrise flagship fund performed very well since its inception, and my $50,000 portfolio has more money invested in that specific fund. And again, in both portfolios, most of my returns are from appreciation. So let's just summarize the results of the second quarter. My portfolios returned 2.3 and 2.2 on my investment, which equal to about $2,300. Year-to-date percentage returns are 5.9% and 6.8%, with monetary total of about $6,000 so far in 2022. Out of these $6,000, about $5,400 are in terms of appreciation, and the rest are in terms of dividends. Total value of both portfolios at the end of the second quarter is $122,820. So here are some predictions for the third quarter. I believe we will see returns decline even further, unfortunately. The markets are likely to cool off even further in the Sun Belt and the Midwest regions due to increasing interest rates and everyone's favorite, inflation. This cool off will eventually trickle down to the East Coast, which will cause the best performing eReit of the second quarter, which is the East Coast eReit in both of my portfolios, to produce lower returns and therefore causing total returns to decline. My prediction for the third quarter is a return of anywhere between 0.8 and 1.8%. On the positive note, I believe that we will start seeing more returns from the rental properties that Fundrise owns rather than appreciation, as people will refuse to pay high interest rates on mortgages and will choose renting instead. The prices of houses will correct and normalize, and the demand will wind down. Of course, this all can be reversed if the central bank decide to turn the money printer back on earlier than expected and lower the interest rates. This is it for me, but I want to hear from you. What were your returns in the second quarter? Are you happy with them? And what do you think the future returns will be in 2022? Make sure to leave your comments below. I reply to all of them. Thank you so much for watching. If you enjoyed this video, don't forget to like and subscribe. And remember, if you're new, open a new Fundrise account using my referral link, deposit just $10, and you will get a $50 bonus. Absolutely free, no strings attached. I will see you in the next video. Take care. Peace. Woo!